Excited to welcome you to this morning's session on integrated capital. My name is Julie Menter. I'm a program director at Transform Finance. I'm really honored to be moderating this amazing panel. I'll just share a couple of comments to just get us all situated, and then we're going to have a really dynamic, exciting conversation this morning. So just to give you some context on who I am, Transform Finance, we work with funders, investors, and really anyone who wants to move money in ways that are accountable to communities, rooted in justice, and focus on the long-term social and ecological well-being instead of just financial returns. And this is really relevant in food and agriculture. Too often, organizations in food and ag doing really important work, advancing equity, regeneration, community resilience, they really struggle to access the capital, the money that truly supports their mission. The system, as it exists, will pressure them to scale quickly, deliver kind of a narrow form of returns, really just around financial returns, or fit into rigid funding categories. So either you do grants here or you do market rate investing there. And that leaves a lot of really promising projects kind of underfunded or forced to make hard trade-offs, like cutting corners on impact to deliver financial returns that investors expect. And so that's kind of where integrated capital comes in. Integrated capital is about combining different forms of funding, grants, loans, equity, guarantees, recoverable grants, list goes on, in a coordinated and values-aligned way. And it's also not just about more tools, more kinds of capital. It's also about how we use them, about flexibility, trust, shared commitment to long-term impact, shared governance, shared power. And yes, financial returns can definitely be still part of the equation, but they don't come at the cost of mission. It's not the only thing that we're optimizing for. So just to give you a quick example, the Organically Grown Company, I don't know if you're all familiar with it, it's a regional produce distributor in Oregon that transitioned to a purposed trust ownership model in 2018, and that allowed them to protect their mission and values long-term without having to sell to a private buyer or go public. And this transition to really a model that centers mission, was funded with a blend of low-interest loans, philanthropic capital, and kind of removing this pressure to exit and maximize returns for shareholders. That's an example of integrated capital in action, a creative approach that made a deeply aligned ownership structure possible that's preserving impact for the long term. Now, it's important to acknowledge that work is not easy. There's no one-size-fits-all. It's often messy. It requires experimentation, humility, real collaboration across different needs and priorities. But we're also not starting from scratch. We have today a powerful mix of leaders who are pushing the boundaries on how capital can further sustainable ag and food systems. And because integrated capital is one way we begin to close this gap, to move from siloed transactional funding towards more coherent, more collaborative, and more transformational funding. Because at the end of the day, we can't really build a regenerative food system with an extractive economic model. So to explore this further, I'm excited to introduce this morning's fabulous panel. So starting on my left, Rudy Espinoza is CEO of Inclusive Action for the City, a Los Angeles-based nonprofit CDFI that builds strong local economies for low-income urban communities. He designs economic development initiatives, researches the informal economy, builds public-private partnerships, and supports working-class entrepreneurs. Under his leadership, Inclusive Action for the City helped legalize street vending in LA, deployed over $4.5 million in microloans, and created a real estate initiative to preserve small businesses in gentrifying neighborhoods. During COVID-19, his team distributed $1.6 million in relief, and during the recent fires, the team also distributed $2.5 million in relief. He also serves on multiple boards and commissions in LA. Welcome, Rudy. Next, we have Kathleen Simpson. She's the CEO of the Russell Family Foundation, where she leads strategic planning programs and oversees impact investing. Under her leadership, and formerly as CFO, the foundation's portfolio shifted from 7% to nearly 95% impact aligned. Kathleen previously served as Director of Finance at a wealth management firm and founded a public accounting firm providing CFO services to families, nonprofits, and businesses. She's a CPA with an MBA and currently serves on the boards of the Bainham Family Foundation, Confluence Philanthropy, and the Sierra Club Foundation. Welcome, Kathleen. Next is Renske Lynde. She's an investor, philanthropist, and advocate for a healthy, sustainable food system. Since 2012, she has helped build the entrepreneurial ecosystem in food and agriculture. She's a general partner at First Course Capital, an early-stage VC fund investing in companies transforming how food is grown, produced, and distributed. She's also been an angel investor in companies like Imperfect Food and Full Cycle Bioplastics. Renske is co-founder and current board president of Food System 6. Welcome, Renske. And finally, Mark Watson is co-founder and president of Potlikker Capital, a farm, community-governed charitable fund supporting BIPOC farmers at the intersection of racial and climate justice. He began his career as a banker at First National Bank of Chicago and has managed investment portfolios for foundations, endowments, and pensions over a 35-year career. He co-designed and managed an integrated racial justice capital fund for BIPOC entrepreneurs and currently serves on the steering committee of Transformative Investors in Food Systems as a director of Winrock International and Hyams Foundation and as board chair of Possibility Labs. Welcome. So I'm going to take a seat and get us started. There's a mic? Yes, magic. Look at this. So let's kick us off. You know, I've said a lot of words about integrated capital. It can feel a little abstract. So maybe to ground this conversation, would love if you could all each provide an example of a time, a particular project where integrated capital was particularly relevant and critical, and to make sure people provide a little bit of context and kind of your work and why this project, to make sure folks have the right context. So maybe Rudy, we'll start with you.
I made a mistake this morning. I was telling my friend, Pastor Eddie over here about it. I woke up and I looked at my phone. It was a mistake. And I looked on my phone and I opened Instagram and I saw an image of a vacated street vendor stand from our neighborhood. And the person was asking, they don't know where the vendor is, they don't know if they escaped or they were taken. I'm from Los Angeles and our city is being occupied and terrorized right now. Integrated capital is about people. That's what it is, y'all. Integrated capital is about people. And people are struggling in our communities, They're certainly struggling in Los Angeles. And integrated capital is about solidarity. Integrated capital is about us standing with each other. And I want to be a good panelist, Julie, so I'll tell you that the example that comes to mind is a street vendor example. As Julie mentioned, I worked with people like Claire Fox, our fearless leader here, for many years in Los Angeles, working together to achieve a dream of legalizing street vending in one of the only major cities in the country that didn't have a system for sidewalk vendors. In Los Angeles, even though we love our street vendors, our government didn't. It sounds like they still don't. And we had an ambition of creating a system where they can formalize their businesses, contribute formally to the tax base, and rise up the economic ladder. And we worked for years, right, Claire? And we won. And not only did we win, we passed 2 state policies. There's thousands of jobs that were created, Julie. But one of the things that they said back then in one of those many hearings in City Hall was like, Rudy, who's going to give us the capital to buy the carts and get the kitchen space that they're going to ask of us? And I said, well, surely the CDFIs would. And then when we did a scan, and we're like, oh man, the CDFIs are totally not going to lend to immigrant entrepreneurs that have no credit, no collateral. And so Inclusive Action had the thought of like, maybe we need to do it ourselves, and we did. And so as Julie mentioned, we've deployed millions since that first $10,000 loan we gave to the first street vendor, which was Adolfo, who was a baker selling bread out of his truck in the Piñata district. He now has a brick and mortar, and he's doing his thing. Integrated capital was about people for us. It was about people. It was about, these are people in our community. This is about solidarity and standing with them and saying that we believe in you. We're going to not only lock arms with you in an advocacy space, we're going to lock arms together with our balance sheets and our financial statements. And we also are going to call on investors to invest in this. And it was a mix and a diversity of investors that came together to develop this fund that is still prospering today and supporting all different types of entrepreneurs. So that's the example that I'll give to you all today. But I want to, as we talk today, integrated capital is about people. It's about solidarity. Don't get it twisted with the rhetoric, y'all. Okay? Don't make it harder than it needs to be.
Thank you. That's really hard to follow. I'm not going to say, wow, thank you for showing up the way you're showing up. I appreciate that. Russell Family Foundation, we are a place-based foundation, and what you're saying is relationships is really at the center of the work that we're doing. So when we think about integrated capital, it's really thinking about meeting our partners where they are. What are the barriers for them that is in front of them, and not thinking about the tool first, but what challenges do you have? And when I was preparing for this and thinking about some examples, I came up with two. Sorry, I have two. One was coming out of COVID. We thought about in our local community, how are people not just being able to get through, but how are they going to be resilient? And we partnered with a local CDFI to provide a loan fund that was really for the underserved community that was not being served by the banks. And we provided that loan fund, but we didn't want to just provide the loan fund. We really wanted to see resilience. So we provided grant capital to the CDFI to partner with those who were receiving the loan funds and make sure that they had the business plan. They were able to really recover and hopefully graduate out of the CDFI. But the other piece that we have, this started as relationships. We had a longtime grantee partner in the conservation space, and they had been doing conservation for a long period of time, and they came to us. They were going to put a fund together. They've never done a fund, but they saw a need that the communities were getting gentrified, and they wanted to put a fund together to use their expertise in conservation in the urban space. So we worked with them, and we made an initial investment out of what we call our aspirational portfolio that's intended to be high-risk capital and sometimes first time in the fund. And then we also used our brand to say, hey, we trust this partner. We're going to make an investment in this fund because we believe in them and we believe in what they're trying to do. Then they identified a piece of property that's right in the core of the work that we're doing, that there's a light rail coming down from Seattle. It was ripe for developers to come in and take this property and develop it to a high-end market rate. They didn't have enough capital to secure the property, so we came in with a bridge loan. And with that bridge loan, we also worked with this partner to say the community really needs to be part of this development. So we provided grant capital in addition with our local community foundation to fund focus groups to really build the project out. And this sounds great. They were shooting for the fences. They were going to be using cross-laminated timber, workforce development in our local area. It didn't actually pan out. The building is now, it's been sold to a trust, so the affordable housing is still going to happen. And I'm sharing that it didn't happen because what I don't want is this panel to be like, this is all roses and everything's going to work great. We made an investment in relationships in the hopes of what we were trying to do, and why not every piece of that mission worked out. There's still key things that did happen because we were willing to make that partnership with people that really saw what the community needed. So it's a way of showing that we were tool agnostic and just thinking about how can we have impact in our place.
I just want to echo this people relationships when we think about when blended capital is the term that I come to use, but integrated capital as well, that there's also an opportunity to leverage the resources, the knowledge, the wisdom, the capacities, the lived experiences of all of the different partners that you bring to the table. So I just think of integrated or blended capital as just like straight up good business, and also like the best way to maximize impact, which is what everybody I think in this room cares about. So I have too many examples to choose from. So across the two portfolios that I have, so the first is Food System 6, which in its first chapter was a business accelerator supporting and scaling a wide variety of enterprises impacting the food system. And then my second is First Course Capital, which was introduced as an early stage venture fund. So I'll limit myself to choosing one from each of the portfolios. In First Course, we have invested in a company called Bobby, which is a clean, organic infant formula company. And Bobby is obviously I'm a venture capitalist, so it's a for-profit private company that has also built out a nonprofit arm that is doing an incredible amount of research and advocacy to both advance the field of infant formula in general, which is a highly overlooked, super important part of our food system, and also looking for ways to expand access to what is currently a premium product. So that's a way that they're able to, again, just like fully move forward with advancing their mission as a company by leveraging different forms of capital and, again, different forms of expertise. And then another example is a coffee company called Port of Mocha. And they are currently based in, well, their coffee supply chain is based in Yemen. And they have developed an intervention that is supporting growers from growing an illegal drug to a high-quality premium specialty coffee. And they have built all kinds of different infrastructure, financial assistance models, TA models, and again, they're building this by both having a for-profit private-facing company or private company, consumer-facing company, as well as this nonprofit that is supporting both their supply chain, but also helping support this overall ecosystem on the ground in Yemen and in other civil war-torn countries. One other example, because it just leverages public funding, because again, like when we think about all the different sources of capital that can come to the table, a number of companies that have, and particularly in food and agriculture, that have longer timelines to market can leverage public resources as they're in their R&D phase. So I've got several different examples of companies that have done that as well.
Potlikker itself is an example of integrated capital. Integrated capital is not new. It's not been used for the right purposes, but it's not new. So the very design of Potlikker Capital, which is a charitable loan fund, requires grants, recoverable grants, and low-interest loans. And then we turn around and put that out in the form of low-interest loans, grants, recoverable grants, and equity. In addition to that, integrated capital includes knowledge and social capital. So we have folks making connections with Department of Ag and folks in DC and guarantee products. And we also have lawyers and knowledge around building food hubs. So all of that gets mushed together in an intermediary because our goal, as you mentioned, is about resiliency of communities. And you cannot build that with one type of capital. And you can't do one deployment. It has to be rounds of deployment. So let me give you an example, quick one. So we're in the midst of trying to solve an issue of African American land ownership in the Southeast of land that's basically a stranded asset because they don't have access to capital, labor, money, knowledge, political access. So we decided to rebuild that network. So we're in the midst of a forestry project which we're solving each of the dilemmas along the value chain. Number one, families that own 40, 50 acres, and they're just paying taxes. So we decided to use project finance to install essentially a sustainable tea plant on individual family plots using grants, recoverable grants, and low interest loans in a special purpose vehicle. So Potlikker will finance their first harvest, and thereafter, the families will own that in perpetuity. The plant grows 50 years. In addition, we decided to create jobs that were culturally literate, able to relate to the family. So we funded 2 formerly incarcerated women who now have a GC that actually installs these trees on family plots. The offtake is a company, a tea company, a brand company that's now selling to Whole Foods, and to have influence over the offtake agreements, which the families will get paid for, we're making a convertible preferred investment in a tea company. So I'm just giving you examples. All that has taken grants, TA, knowledge, convertible deals, and we have the ability to take the capital that we get from many of the people in this room and transform that into the needed capital to make these projects work.
Thank you. Yeah, and you're already getting a sense, right, of there's the human piece, the solidarity, the relationships, and then the technical pieces, right, of where do you need a convertible note, where do you need a recoverable grant, and what are the instruments there? So it's an exciting field of work. So let's go, dive in a little bit. Maybe Renske, let's start with you. You've worked across many ranges, many types of capital over the years, and today a big part of your focus is venture capital, which is a very specific, type of investment. Curious, kind of why you made that choice, and where do you see this type of capital working really well, and where do you see areas where maybe other kinds of capital become needed?
Big question. In the 10 years that Food System 6 was running a business accelerator, we learned a lot by supporting, I think it was over 50 different companies, nonprofits, co-ops. I mean, we were agnostic to the legal entities of the entrepreneurs that we were supporting. And access to capital, full stop, is one of the most critical issues. It's by no means, a panacea. Capital is not always the answer, but it was such a roadblock. And so one of the ways that we were supporting those entrepreneurs was by bringing different forms of capital to the table to help support their different unique needs. And for me personally, I saw venture and food as an asset class becoming more and more prominent, and I wanted to have a seat at that table. I've been working in food for 30 years, 20 of that was in nonprofit, and I felt like there was an opportunity for a venture capitalist that actually cared about impact to be at these tables and to help get capital into the hands of the kinds of companies that we've subsequently invested in that have impact core to what they're trying to achieve. It's not an add-on, it's not a tack-on, it's actually core to their business model. So that's why I decided to get into venture. One of my earliest mentors, who some in this room may know, his name is Mark Ritchie. He just always taught me, you always want to have a seat at the table. If there's a conversation happening, get in there. So I did it. Venture is, as all the instruments that we're talking about, like very specific. It can be a blunt instrument, but it is also highly effective, particularly for companies that are on what you might call a more rapid scale plan or trajectory. And to be clear, by rapid, most venture funds have a 10-year lifespan. So we're not talking about like an instant overnight type of growth trajectory, but venture is really helpful in those types of businesses where there is a scale trajectory that is fairly quick. But it is by no means the only answer, for sure, particularly not in food and agriculture. But we do believe it is an important tool in the toolbox.
Yeah, thank you. Appreciate that. Maybe Kathleen, let's move to you. You know, your foundation pursues total resource activation. I love that term, which is essentially, you know, I'd love to hear a little bit more, kind of how you define it. And then, in addition to define it, can you tell us kind of what that looks like in practice? Like, what made that possible, and what's been hard?
Yeah, happy to. Russell Family Foundation was founded in 1999 when George and Jane Russell sold Russell Investments. So we come from an investment background in the DNA of the foundation. And when we say that we employ total resource activation, what that really means is that we're tool agnostic. We're really looking at what are we trying to accomplish and then applying the tools that are available in philanthropy. That can be investments, grant capital, relationships, communications. And an example of how that comes into play, in 2021, we went through a strategy review, and we declared the climate crisis as our North Star, and we were going to point all of our philanthropic assets towards that. And the board was asking, we were 95% impact aligned, what more could we do with the investment portfolio? And so at the time, we went through some learning, and we made a net zero commitment. And with that commitment, we wrapped it with a program called the Catalytic Climate Finance Program. So it's being run by the investment committee, and I asked the board to give them grant capital because there's times when investment capital is going to be the solution, but we also need to partner it with grant capital. And I've got some committee members on the investment committee saying, what are we doing with grant capital? But it's an opportunity for us to be really thinking about what are we trying to accomplish and how are we going to do that. We also, at the same time, launched our Food for Climate Solutions program. And so this is my first conference, so thanks for having us here. And we are now doing the same thing with giving the grants committee investment capital out of our aspirational portfolio and asking them to do the diligence for the mission side. They're the best ones that are going to know what's the strategy in our food program. We're not expecting the grants committee to be the investment experts. We'll have the finance committee help them, but really thinking about what tools do we have. And ultimately, I would love to see investments and grants with the same partner and thinking through, like I mentioned earlier, just meeting our partners. What are the challenges and the barriers that they're facing? And then an example of that is we have a partner who was putting in heat pumps, and they're on a reimbursable grant from Washington State University, and they got their second, they did 100 heat pumps in 6 months. They got a second grant, and they knew that because they're reimbursable grants, they didn't know how they were going to actually deploy that because the cash flow was really a challenge. We got introduced to them from our banking partner, and the nonprofit has had credit experience, but they were a new nonprofit, so they created their own new nonprofit, so they weren't able to get their own credit line. So it was a matter of, okay, well, what's your barrier? We could have given them a loan and just had it come out of the foundation, but that wasn't going to solve the problem of that they didn't have credit history. So we have a credit line with our bank, and it's in case the market takes a shock, and we haven't used it. So our bank said, what if we give them access to your credit line and you guarantee it? And so that's what we did. We talked with them, what was your barrier? Brought in our partners with our bank, and they're now using our credit line. We have a loan guarantee on it, so if there was a default of any kind, we would grant to cover that. But then that also helps them to build that credit history, and hopefully then they'll be able to have their own credit line. So it's really meeting people where they're at. What tool do you have? And then really being tool agnostic.
Yeah, thank you. So hopefully that's giving you all a sense of different kinds of capital, how they can come together. But as we said earlier, it's about more than just the money. Maybe, Mark, if you could touch a little bit, when we were planning for this panel, you had talked about the importance of having someone hold the whole. And in particular, in these examples, are multiple types of capital, multiple stakeholders. So we'd love to hear a little bit about kind of that role. What does that look like? Kind of what's at risk when that's missing? And yeah, can you tell us a little bit about that critical component of integrated capital?
Sure. I want to be real. We've been going to these conferences, for many of us, for years. And we sit here and we expect the entrepreneurs to know how to build capital stacks, to do the pro formas, to talk to our program managers, then talk to the investment people. If we were sitting on Wall Street, which is where I came from, there are huge firms that do these services. We're in this nascent part of the sector working with the farmer, the food distributor, the logistics manager, and we're asking them from their own backgrounds to know how to do real estate deals. And they barely have money to pay their taxes, let alone a lawyer. So the reason why I lay this out is I want us to own the ask that we're asking people and realize that typically there's somebody who's managing the agency conflict. If you have a lawyer and you have an equity investor and you have an angel investor and you have a potlikker, all of us are coming to the table with our own agendas. And that farmer is sitting in the middle trying to negotiate all of that. Are we helping or harming? So that is a friction piece that all of us sitting on this stage and all of us sitting at the tables, we need to resolve that. And so my ask is that when we offer resources, that we collaborate with the other people in the capital stack and sort of lay down our swords and lay down our agendas. And remember what Rudy said, it's about the person. You know, when we talk about developing, I'll get off my soapbox, but when we talk about developing countries and people make investments, the goal is we're going to build a school. It's not, I'm going to get a 9% return on my capital. So let's keep the objective. So we need to do sort of the agency conflict negotiation as part of the capital stack to do integrated capital.
Yeah, thank you. Yeah, Rudy, let's go to you then next. You know, I loved how you opened around reminding us about the importance of solidarity as a frame. And maybe if you can tell a little bit more about what that means, you know, to show up in solidarity as a capital partner. How does that mindset shift challenge kind of traditional ways that funders may relate to grantees, investees? Tell us a little bit more.
You know, I think it feels different when you because it just prioritizes people. I think as I'm hearing my colleagues talk, I'm thinking about my friends at EFOD. I don't know if Trish is in the room. I know Anthony's out here. Equitable Food Oriented Development. It's this like really alternative practice, a community of practice of. And I'm on the steering committee, and so it's really unusual to be in these meetings, and it's like a ragtag group of like financiers and advocates and farmers, and we're trying to rethink how to lend. And we're trying to think about how do we pair capital with grants. And not only that, how do we pair the entrepreneurs that we're investing in with technical assistance providers to help them through the process, right, that Mark described. And I think that in that process, when we make those investment decisions through EFOD, we're just prioritizing the people and we're prioritizing the mission. And that's just kind of really the difference. And I think that sometimes we get caught up in the romanticism of Wall Street and financial systems that we forget people, right? And so I think in order to get to that place that we should get to, that's people-centric, I think we have to really do what Mark just said, is like lay down our swords and our egos. I was in one of the dinners last night in Sicily. I don't know if she's here, but I've been thinking about what she said. She talked about the internal work that we all have to do. The internal work we have to do to confront our fears of running up against the system that we've inherited. The internal work we have to do to put down our egos and our own agendas to say, you know what, this is not working. I'm just perpetuating the system that's harming us. I need to put that down and lock arms in solidarity with others. Solidarity requires love and humility. You guys feel that? Am I answering the question, Julie? I mean, I think to us in our work through EFOD, at Inclusive Action, when we're thinking about real estate acquisition, we just bought this building a few months ago, and it was a capital stack, which is just a pile of money, of different mix of money. It was grant capital. It was our board voted to put some money from our operating reserve into this deal. We found an investor that was going to give us the 2% money that we needed to keep rents low. And it was solidarity in action. It was like, yo, we got to make sure these tenants stay. That was the agenda. Can we get a little bit out of this? Maybe can we pay for some of our costs? Maybe, but the agenda is to try to keep folks here. Right now, I'm focused on, I was telling my friend Monica, who's in the room, we have a big portfolio of different types of businesses. A subset of them are street vendors. And as I just shared at the opening, street vendors aren't working right now. So they are great, clients of ours. They pay their loans, but should they be paying their loans right now when they're being terrorized? What do you guys think about that? So my vice president of lending, Veronica Saldana, yesterday sent me a chat while I was here and was like, Rudy, we got to send out notices, and we want to defer people's debt service for 60 days. And 60 days is tied to the fact that the military is going to be in our city for 60 days, allegedly. And so she's like, let's do it for 60 days. And then I was like, Vero, what is the next? What else do they need? What if we raise 300 Gs? It's not that much. That's what the portfolio is, just to figure out if we could even forgive this debt for the street vendors. Well, what is that going to require, Mark? It's going to require us laying down our swords, thinking about, it's going to require integrated capital. It's going to require somebody saying, right now what we need is grants. This is what is needed here. We started with debt. That was working for a time. Now we need a different type of tool. The question that I have for us as a field is, are we willing to bring in other tools into our toolbox? And sometimes I feel like we're prevented by that because of our fear and our egos and the swords that we have in this field. Does that make sense?
Thank you. So one thing panels...
Can I just say something?
Yes, please.
If anybody knows where I could get 300 Gs so I could get these street vendors, please...
Find him after the session. Yeah, definitely, right? That's the thing. So it's easy to say, and then you're like, but we do need those resources. So I feel like we've been making a Gestalt case for, we've been appreciating the clapping and following and hooting and about why this is so amazing. And it's not all like roses and ice cream. So want to kind of turn to some of the real challenges here of this and putting it in action and some of this. So maybe we'll do a couple questions here. Maybe Kathleen, if you can start on kind of a myth or assumption about integrated capital that you find yourself correcting. What do you wish people understood more?
I think that what I get the most is impact investing, concessionary investing. And we think, I said we got total resource activation, but we think in our investment portfolio, we break it up into 3 buckets. One is our operations, and that's investments that are in like fixed income cash. And then we have our growth portfolio because we are a perpetuity foundation. So we do need to have returns to keep up with, to stay in perpetuity, but also keep up with inflation. And then we've got our aspirational portfolio, which is considered to go alongside of our grant making and really this vertical type of capital. And what I want to say is that the rate of return is a trade-off, is a choice. It's not an inherent condition of doing impact investing. We've been doing impact investing. We're 95% impact aligned. It's across all asset classes, and it's at a variety of impact. You can't have the same impact in cash as you could have in a private investment in forestry. But it's a choice. And so I think that that's the myth that I want to dispel, that sometimes you do want that choice because that's what is needed for the solution. You do need lower interest, no interest capital. Our aspirational portfolio is intended to be preservation of capital so that we can keep renewing that. So I think that that's one of the myths. The other myth is that there's not enough opportunities in the field, or how do I build it? And what I would say is create partnerships, create that pipeline. Who's holding the center, and really thinking about the partnerships. You don't need to do it all on your own. And I've found that this field is such a friendly field, and there's partners. You mentioned organically grown company. We have a network of foundations, of place-based foundations that we share pipeline. And Craig Kelly in the back there is part of that. He brought organically grown company to our peer network, and it was an opportunity for us to make a place-based investment in a business model, and it came because of the relationships. So centering those relationships in the work that you're doing. So bottom line, investment returns is a choice, not an inherent condition of the work.
Yeah, thank you. Renske, anything you'd like to add in terms of myths?
Yeah, I mean, I think maybe also speak to a challenge that arises because of some myths or assumptions. But I think, and I just want to also shout out, I know that SAFSF is going to be launching a community of practice on integrated capital. So stay tuned for that. I think there are a lot of assumptions around the different forms of capital that just, I mean, as Mark was alluding, like just the expectation that everybody knows and understands what all of these terms even mean. What does that look like? So I do think there's some distancing that's created, and I am hopeful that this community of practice is going to be able to level set and really just help lift up the entire field in terms of a knowledge base and understanding. One of the biggest myths, for example, that I encounter all the time is that a private company has a mandate to maximize return for shareholders. That's not actually true. You actually, as a private company founder and business CEO, you can stipulate in your articles of incorporation that you have different objectives. That's something I had to learn that. I just had an assumption that corporate law required that. It doesn't. So I look forward to the opportunity to kind of unearth some of these myths, because I think it just creates more distance, and there's what you hear. I'm a venture capitalist. That sounds like kind of scary to some people. Vulture capital's out there, right? Like that it's a rapacious form of capital, and in some instances, and in the hands of some people, sure, but every tool is a weapon depending on how you hold it. So that's something that I think, again, look forward to communicating. I think it's also really hard, right? I mean, it's hard for all of these reasons that we've discussed, and I think sometimes that difficulty can get in the way of people stepping in and rolling up their sleeves, because it is fairly tedious, right? This is pulling different ecosystems, pulling different mindsets, pulling different perspectives together. So again, as has been echoed on this panel, there is a humility that's required to say, like, I don't know what you're talking about, but I think we should talk and try to break down some of these barriers in semantics, really. So.
Yeah, thank you. My mic had just died. I'm just holding it badly. Maybe the place where I want to take us next is, even when it works great, where we've given some really powerful examples of how integrated capital can be deployed, I'd be curious to hear where it can fall short. There can be limitations or challenges in terms of getting follow-on capital or aligning stakeholders down the line, or even thinking about, is this truly meeting the needs of communities, like this form of capital that we're trying to kind of pull together? So I'd love to get a little bit of that as well. Maybe Mark, if you want to kick us off on that.
Yeah, I keep coming up with different answers to this, but they lead back to the fallacy that we're all systemic investors. I'm not like down on all of us. I just want to have a real conversation. I remember when SRI was the new thing. We're now, what, 1.2 trillion globally. And
Say what SRI is.
socially responsible investing, and it has iterated, and we're in a different place now, and it will be in a different place later. Impact, mission-related, ESG,
Systemic.
All sorts of, exactly. My point being is there's a through line from the investment in the Bibb lettuce grower that's down the street, that's local, and we put in our annual reports, and we feel good about that. But we all are, most of us are institutional investors. Like we sit on a perch where we're looking at like fiduciary responsibility, we have banking relationships. Well, we play in a whole different world than that farmer. And we don't think about how do we give access to that farmer to the world that we're living in. That's systems change. For example, are there ways that we can build collective, aggregate groups? We keep talking about communities of practice. What does that really mean? Is it a group of farmers that's able to go in and get policy changes? If you think about the major shifts in ag have happened because somebody started in the 30s farm credit because the banks wouldn't lend to farmers. It wasn't only individual loans of a philanthropist. It's because of policy change annexed with capital. We talk about land repatriation now. It's great to have generous gifts, but we have about a third of the land that's about to move in the next 2 decades. And it doesn't normally move to certain parts of the community. There need to be systemic model changes, not just transactions. So I guess my issue is we're doing a pretty good job of modeling individual transactions, but they need to have a through line to some systemic development of intermediaries, different models, different policy change, and they need to move together. We need to move those at the same time so that it has a resonance for the change that we're looking for. So that would be my answer.
Yeah, thank you. Rudy, what would you like to add?
You know, I just wanted to say, just to add to what Mark said, is integrated capital does not fall short. Integrated capital for me is solidarity. But where things fall short is with people. We fall short sometimes. And I think if you are pursuing an integrated capital strategy, which is essentially, again, a mix of different resources to advance an agenda, we sometimes as actors within that system fall short. And that's like the personal work that we have to do is in this time that we live in today, when our cities are being occupied by military forces, let's not fall short ourselves, right? And so some of the folks that were in the session that I was in Tuesday, I told a story. Inclusive Action is a special place because we're not only a lender and a real estate steward, we are also an advocate. We have an advocacy team, and we joined as a plaintiff earlier this year in a lawsuit against the IRS to stop the IRS from sharing data with ICE. So I'm happy that some of y'all are applauding. That's great. You know, our team is proud of what we're doing, but we had a funder that was not. In a couple of days, we were given that week before we announced we got an award letter. I was super happy. I was like, this is a new funder for us. 2 days after the press release went out, they called and they said, yo, this isn't scary for us. We need to talk. We need to talk to our lawyers. And it was like we were in purgatory for like 2 months. And so they pulled the money back. So the idea of them investing in us is a sound idea, you know, integrated capital, but we fall short in that time. And I got to tell you that my team was mad. Man, I had some of my quiet team members who were like, fuck them, dude. Like, this is not cool. like, we got to call them out. But you know what? I was like, man, I feel that too, but maybe I'm falling short a little bit too. I want to lean in more. I want to lay down my ego and my sword, and I want to lean in more because they're just afraid. And I hope that the other side also is willing to lean in a little bit with us. We need to lean in with each other. And I want to say that I'm using all this language, Julie, that's like might be mushy and emotional, but it's also rigorous. It requires the leaning in consistently. It requires the examination of the deals in a different way. It requires us to have strong MOUs with each other and really go through the process to examine our relations and dive in, even if it's tough. Does that make sense? One of our real estate deals, my last quick example, a few years ago, we had an integrated capital deal where we bought 5 buildings together on the east side to prevent gentrification with 2 other nonprofits. These are my homies. These are people that I have trust with. And we bought these buildings, and I want to tell you that I fell short because we didn't do the rigorous work of putting together agreements with each other. And guess what? One of my partners passed away unexpectedly. And then the other partner moved on to a different gig. And then we had new leaders in place, and we didn't build the systems. And so what I learned from that is like, man, like the initial idea of solidarity is there, but solidarity is also rigorous and requires documentation and requires, the leaning in all the time and making sure that we're asking each other the tough questions like, Kathleen, are we really down? Okay, cool, let's get that on paper. What happens if we fight? How are we gonna organize around that? If we have a capital call, who's gonna put in first? All these different things you have to build in. That's solidarity too.
Yeah, thank you. Fighting fair, right, is always key. So I see the timer here reminding us that we need to wrap up. Let's give folks a takeaway, one thing. So either one thing you maybe haven't had a chance to share yet, you want to make sure we get out of this conversation, one takeaway to make sure we're crystallizing it, one like, here's the next way, a way to get started. So I'll leave it up to you for one last thing for folks to walk away here. Yeah, Mark, start with you.
I just want to say we're at an inflection point. We have foreclosures about to ramp up, inflation. We talked about relocalizing. We're about to lose a lot of that. And we can talk about integrated capital. We need to organize now. One of the stats I always throw out is I ask people, guess what percentage of the agricultural land is owned by Afrikaners in South Africa, and that number is 77%, even today. That number is 95% in the US of people who are not of color, or white women, or LGBTQ. So we're already there, and we're about to get worse. And the focus on sort of the Midwest is the climate refuge. Those numbers are even worse. It's 1%. So, we may not have the options that we might have today 10 years from now. We have to move now. So that would be my leave behind.
Thank you.
I'm going to do one more shout out for the community of practice, because I think it's going to be really important for this group of funders and investors and lenders to come together and really start to think creatively about how to meet the moment. We're called to meet this moment. I also want to shout out my colleague Lauren Manning at Food System 6 will be speaking just shortly after this panel on the first pooled guarantee loan program for regenerative agriculture that Food System 6 has been spearheading. So just another opportunity to get engaged, get involved, roll up your sleeves, and get some capital to work.
Thank you.
For me, I've been reading the book Abundance, so if anybody has not read it...
Say the name again?
Abundance. And I really do think it is, where is capital not flowing that it needs to flow? And for philanthropy, that's a role we should be playing and leading, and really thinking about working from abundance and not from a scarcity mindset. The capital markets have been, winner take all, and I think we can really shift that to have it really be thinking about who are the outcomes, who are we trying to invest. And I think the food system is really a place that there should be more capital flowing, and how do we break that system down so that it's really for the people, the planet, and everybody who's nourished by the food system.
Thank you.
That book's in the queue for me in the library. I'm waiting my turn from Ezra Klein. My takeaway for y'all is about fear. And I want you to think about how can you confront fear today? Some of us are going to go back to our worlds, and maybe you have I want to do more integrated capital deals. I want to focus on people. And you get into your office or your cubicle, and then you might get stuck. What do you do at that moment? Do we revert back? Or do you say, you know what, I'm going to join forces. I'm going to call Kathleen and text her and be like, hey, how do I do this? How do I organize? Do you have any tips for me? I need backup. I'm afraid to go out on the streets. I'm afraid to speak up. What do? I need to reach out to somebody. So I think that one thing that we can do, and I've been trying to lean into this a lot this year, is texting my friends or new friends. Hey, I'm afraid today, or I'm trying to do this. Do you have advice for me? I want to tell my boss that we should approve this deal, but I don't know how to do it. We really need to lean into each other and we get over our fear of talking to each other. Okay.
Yeah, thank you. Thank you so much. This is so rich. Please join me in thanking again this wonderful panel.